You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time, once again, for a little program we like to call around these parts the option block. A little bit of options wit, some wisdom, some analysis, some education, a sprinkling of your questions, and of course, stir it all together with a peer into the future. And you have the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. 500 plus programs for you guys to check out at your convenience in terms of just this show. I don't know how many thousands, tens of thousands there are on the full network. A whole 10 years worth of content, listeners. That's a lot for you guys to sink your teeth into. Easiest place to do just that, of course, the mothership, the flagship, theoptionsinsider.com, as well as, of course, iTunes or TuneIn or Stitcher. If you just want this show, search for Option Block. If you want the whole kit and caboodle, the Options Insider Radio Network. It's all 15 shows. Just be prepared. It's a mighty mouthful, but it's good stuff at the end of the day. And, of course, however you listen, including those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. We like you guys, too. We tend to like you guys as well. You can always listen live. However you listen, though, on demand, after the fact, live, whatever it may be. Hit us up with your questions, your comments. We love to hear from you guys. Speaking of hearing from people, let's see if we can hear from today. Oh, I'll play his intro music, listeners, and we'll see if you guys can guess who is joining me live and in studio.
Pearl Harbor ruled.
Jesus, Pearl Harbor. Now there's a sound clip of you saying Pearl Harbor ruled.
Yeah, I think that's notoriously
that's
like
fucking crazy,
a terrible
man.
movie.
No.
Pearl Harbor rule.
Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor rule. Pearl Harbor. How do you not like Ben Affleck?
Nah, not a.
Ben Affleck's awesome.
No, he's not.
How do you not like Ben Affleck?
Nah, not a.
Ben Affleck's awesome.
No.
Awesome. Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay. Michael Bay.
Yes, listeners, those nasally tones mean we are joined in studio, so he's consuming all of our beverages, of course, by none other than the Greasy Meatball himself, Mr. Mark Sebastian. Mark, welcome back to the show. And just to clarify, for anyone out there who is outraged, you are indeed referring to the horrible film and not the horrible historical atrocity, correct?
Correct. And let me say welcome. Happy Thursday, everybody.
Oh, I'm glad. Happy Thursday to you as well, sir. And
good to be here. I always enjoy coming in to actually do the show. It's a blast. Mark and I have a good time when we're in between segments, and we're ready to take your questions. And I think we got a lot to talk about.
We do have a lot to talk about. And you're getting set up, too, a little bit later to do talk some business.
I know.
So in which case, I will step away from the microphone, which is always a joy for me. And you guys get to talk some business with those strange fellows who made that music for you right there. So if you like that, listeners, tune into the business show on our network to get more of that inspired madness, shall we say, and a lot more there. Is that your theme? Is that your tagline for that show, Inspired Madness?
No, that's actually a really good idea, but no, it's not.
That's why I get paid the big bucks, sir. All right, speaking of big bucks, let's get right into...
Inspired hilarity.
Oh, inspired hilarity. That also works. But thinking of big bucks, let's get into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. Welcome to The Trading Block. Like the man said, this is the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. Bit of a breather today, Mark, on the old street after kind of a nonstop upside palooza, I guess you can call it, to use a technical term, over the better parts of the rest of this week. Most of the major indices closing today. By the way, we are streaming it live here on Thursday, the 16th of February, 3 o'clock, a little bit after 3 o'clock Central here, listeners. For all of you listening after the fact, S&P pretty much unched, Nasdaq, Dow pretty much all unched on the day. VIX Cash taking a bit of a breather here as well, still shy of the 12 handle. I forgot what my prediction was I think I got a point or so to go on the downside before my prediction starts kicking in for volumes. We got a whole other day, so we never know what's going to happen going into a long weekend. They could crush it pretty nicely, which would work out pretty well for me. With that said, Mark, maybe we'll start there. We've been getting a ton of questions about this, so I'm sure you probably have as well. It's another one of those weeks where, hey, the market's up and the VIX is up. How is that possible? Oh, my God, cats and dogs living together, mass hysteria. Today, not the case. But whenever these days, these weeks happen, I'm sure your inbox is flooded just like ours with how is this possible? So what have you been telling people over this past week?
Well, there's a lot of reasons why that can happen. We actually kind of specifically know the reason that it's happening this week. I don't know if on any of the other shows you've talked about this Catalyst Funds debacle.
Talking about the risk reversal that was going up out there?
No, Catalyst Funds. So the stock symbol HFXAX. It's a mutual fund, and they're kind of famous. I'm surprised that you didn't interview them for their big 1x3 call spreads that they trade. Long 1, short 3 for a credit.
Oh,
and then
that's a recipe for long-term, perhaps insolvency.
Well, they do it.
And VIX, you're talking, I'm assuming.
No, this is an SPX.
Oh,
so all right,
I can get a little bit more behind that in SPX than I can in VIX.
You would think, except for I don't know if people know this, but on Wednesday we had a really strange VIX settlement print. The previous day, VIX had settled about 1085. The print was 1212. That is a huge variance from the day before when the market was basically flat. All right. Could we see a 1212 print when the market's down 30 or 25 or even 18 when we're coming from 1085? Yes. Should we see a 1212 print when the market is down 3?
Are you implying that the VIX print is somehow controversial, sir? Madness.
In this case, the issue was when you are short a lot of 1x3 call spreads and then the market takes a massive leg upward and you don't cover them when they're cheap, sometimes you have to go racing for fab call options. And so what happened was, if you look at the major, now everybody already knew about this, but actually if you go to Zero Hedge, I know.
The bastion of market integrity.
No, they got
and calm, rational sentiment that is Zero Hedge.
Yeah. Now, the overall crux of the story is silliness, but the one thing they report that's actually really value is you can actually see where this guy had to cover all his strikes. So he was short at the 23 quarters, 2350s, 2360s, 2370s, and 2375s, expiring tomorrow on the print. All right. Meanwhile, for those of you new to options, the final week of expiration, when the underlying makes a quick move towards
things get fun.
Yeah, when the underlying makes a quick move towards your short strike,
it's the best thing that could happen in the world.
You have this thing called exponential gamma.
I love it. It's great.
So what happened is this guy is now racing. This Catalyst Funds is racing to cover all their call options. So now I know you'll never believe this, but the market makers, once they figured out that...
I'm sure they were kind and charitable, and they let him out for a reasonable price.
They let him out for a reasonable price, and there's no way they bought a lot of futures in front of it.
Oh, those wacky market makers.
My understanding is our friends at Cisco had a field day with this guy. But so what happened was, on a relatively low volume day, this guy is buying the equivalent of 1.5 million deltas, and
that'll move the needle a little.
That'll move the needle. So you got to think market makers are hedging this crap off. So what you end up with is This guy is racing to buy as many calls as he can, driving up volatility. All right. Then the market makers are slowly selling this to him, and they're buying a lot of futures. So if you look at yesterday's price action, you can actually see when he did some of his big trades, you see a big push up in the S&P. So a huge chunk of yesterday's rally was kind of option driven by market makers having to hedge themselves, and that entire VIX move was actually from call skew going up, not from put skew going up, because this one fund in particular had to cover about, I think I did the math. It was something like 100,000 Feb call options, something like that.
There are a couple of things that you think would be inherent in doing a trade like that. When you first said it, I thought you said VIX, which to me, long one, short three, we know is a recipe for disaster in VIX. I can get behind it a little bit more in SPX, not the same propensity to outperform to the upside, but still, you'd think inherent in any ratio short strategy like that would be, or at the very least, babysitting.
Yeah.
You're going to be on it all the time. You know when you have to roll. You know when you have to adjust. Your grandma in Iowa who buys one and sells three knows that.
2 weeks ago, he could have bought the February 2350s for 40 cents and did not. So for those of you now their intention is to stay in business. But what they don't realize is, even though they think they're in business, they're already out of business. Good night.
You'd hope that their intention would be to stay in business.
Well, it is, but they're already toast.
Who's gonna plow more money into them after that?
No, there's going to be. I mean, and the fund name is completely misleading. It's like the futures hedged strategy.
In what way does that?
Yeah, exactly.
Short three on the upside.
And year to date, the fund is down 25%. They've lost about 5% in the last 3 days. They are about as toasty as it comes.
What is your estimate to blow out if you would do that same strategy in the VIX? I don't know what they're doing, like monthly or every couple quarterly. How often were they doing this? But still,
monthly.
So VIX, your blowout, you got to estimate somewhere within 6 months for that strategy.
Yeah,
probably just one time is all it takes, and we all know VIX.
Yeah, that strategy should be done in reverse when you're doing VIX. Until it pops, then you unload it. But really, I think what this is a case is one, a guy that wasn't managing his positions properly. Two, was not following the Glengarry Glen Ross rule. All right, we need to get an ABC always be closing. Which
I took my little guy to the Lego Batman movie this past weekend. There's an ad for the Boss Baby, which is voiced by Alec Baldwin, and there is an always be closing joke in that movie as the Boss Baby. I was like, Alec Baldwin can never escape that role, but also it is his greatest role of all time. So I'm okay with seeing a cartoon version of that.
Yeah. So the fascinating piece is that likely this gentleman had an opportunity to basically be long, because he does this 1x3 for a big credit. If he covers those calls for 40 cents, he ends up owning those other calls probably for free, instead of being a fund destroying, shutting down type event. Instead, he's now reporting a massive gain this month, and everybody's happy with his performance. So a failure. So this guy had a failure to cover. He had a failure in understanding market mechanics. He probably should have there were better ways for him to hedge himself than covering all these, or he should have covered way earlier. And then a failure to understand that what the effects of his trades would have on the overall market. So what he probably didn't get was that by covering his calls, the actual market was actually going to move more in his face and make the pain even worse. So the fact that he didn't front load a bunch of futures into this call purchase.
It is stunning. You and I talked about this before, how many people are in the quote-unquote asset management world whose skills clearly lie elsewhere. In this case, this guy or this fund clearly had the skills to gain AUM. But we all know that the skill set to gain AUM and the skill set to actually implement, to manage that AUM are two wildly different things, and they don't often go hand in hand.
Correct.
It is odd that they would get into a strategy like this. Somehow they stumbled across a ratio short to the upside strategy without any of the intendant knowledge to be able to manage it.
I mean, I love ratio. I mean,
no, they can be great.
Love them. Listen,
you have to sit on them.
You will never hear me complain about a bull front spread unless you don't manage it.
You know my love of front spread and back spread.
If you manage your deltas on a bull front spread, that is a highly favorable position. Highly favorable. And so it just doesn't make any sense that this guy did that.
Yeah, this it's just amazing. Somehow you have to have enough wherewithal to stumble into that strategy, but not. You're right. You have to have some deltas ready to go in your back pocket. You have to be on it all the time, especially expiration week.
Yeah.
How do you walk away from it or not let your calls go crazy on expiration?
Never take an option position into expiration unless your intent is to play expiration. All right. If your intent is I want to put on this expiration play because I think there's money in it, great. Go ahead. Be my guest. If your intent is to position trade and you're building a position and you're trying to make money on income or on position management, never take a position in expiration. You're just asking to blow yourself up on an unintended trade. It is the single stupidest thing you can do.
Yeah, we have this discussion a lot on the show too about people always writing in what's the best way to play earnings, and if you don't really know what you're doing, maybe you stay the hell away from them. Certainly, maybe this guy should have. Or you're right. If you don't have the wherewithal to play earnings, you don't understand this exponential gamma factor we're talking about, then just close them out.
Yeah.
It's not like it worked out all right going into last week. With this trade. Yeah, there's a lot of question marks here. So there you go, listeners. You don't have to feel bad about yourself if you got run over in one of your other trades, or you didn't you didn't roll your covered calls in time, or you did something else, and maybe you got a little greedy, you got run over a little bit. I'm guessing it wasn't to the size that our friend here did, let alone have the rest of the market pile in and just make that fun. Taking that salt and just rubbing it so aggressively into that wound. You can't fault the market makers though. These guys get run over all the time. They get a chance to finally lean on somebody else. They're going to take it. Yeah, but it is kind of painful.
If you look, this guy had the same problem in December.
Oh, he did it before.
Yeah, not this bad, but he had a similar problem.
So he had the same 1-by-3 ratio, and he got
it. When we had that return on December.
So then there's no excuse.
Yeah,
if you've been down that road, if you've burned by the fire before, and you keep reaching into the fire, that's your own fault.
Yeah. So, folks, the way I always think about trading and bad losses is taking losses as a trader is a lot like marital sex. There's a lot at first, and then there's less and then there's less.
Why not go from there?
There's less and less over time.
There we go. Definitely get explicit today. Yeah, that's what we get for having Greasy Meatball in the studio.
That's not explicit.
In the studio with beer, fun things are going to happen. Speaking of fun things,
I'm sorry, that's a great quote. You could put that one in the.
A little bit too much insight into the Sebastian marital bliss there for maybe some of our listeners. But I know speaking of disasters, one of our old friends, good old Alien versus Predator, AVP, not having the best day today. Mark coming out before the bell, getting just I think the technical term is shellacked.
They are
off 18% at the close, so 477 off over $1. Intraday they got down as low as about another dime or so nearly 19%.
They are getting destroyed by Rodan and Fields. I mean, anybody, you're on Facebook, correct, Mark? Anybody who's got who's in the above the age of 35, their wife is either selling for Rodan and Fields or getting assaulted to sell for Rodan and Fields on a daily basis, if not greater. It's a multi-level marketing company who was really the first, them and Stella and Dot, which is another one, that really figured out how to use Facebook as a multi-level marketing model. And they are just having Avon Products launch. And the piece of Avon Products that isn't getting taken to the cleaners by Rodan and Fields is getting murdered by Mary Kay.
Was it last time you saw the Avon lady come knocking on
No, but you still see the pink Cadillacs floating around.
That's true. You
do. And so Mary Kay has positioned themselves as kind of high end. Meanwhile, Rodan and Fields has gone after the aggressive marketing of Avon. I mean, Avon's gotten, other than Skin So Soft being an effective insect repellent, name me a single Avon product that people use regularly. That for a lady that's under the age of 90.
I don't have the deep insight into the space. That's why I like having you in studio. You bring insight into many and sundry areas. Despite the shellacking, they're not as low as they were even back in June. They were trading south of this back then. They were trading $1 lower. They were trading $3.75 back then. So maybe there is some room on the downside for them to go, or maybe you feel this is overdone. Either way, big day here to the downside at least, and big day from an options perspective. They did almost 10x their ADV today. Surprisingly, actually it is surprising, calls outnumbering the puts on this one, which is kind of interesting. So our old friend Alien versus Predator, we love them just for the ticker alone. here on the show. Getting a little bit of the predator coming back at them, I think, today with the massive shellacking off 18%. That's pretty much it for the earnings this week that were kind of interesting, Mark. Not a lot of other names really knocking out of the park. Most of the big names we've already kind of talked about. And in general, are you still with that narrative? We'll talk about it more on vol views, obviously. Are you still with that narrative of it's kind of been a couple of outliers like Activision notwithstanding? It's kind of been a bit of a resounding meh from an earnings volatility perspective?
Yeah, I think that there haven't been a lot of big underperformers. Amazon did exactly like you and I talked. It's gone right back to whence it came. Google's kind of doing the same thing. The only one that really blew things out of the water was Apple, and that's continued. And then when it turned out that Buffett owned 57 million shares of it, people got on board. They said, okay, I'll take some of that. That's an incredible amount of shares of Apple. I mean, what percent of the float is he?
He's good buddies with, or former good buddies with the old team over there. But yeah, you're right. We were talking about them on the show, obviously, and Apple, and of course I think your technical term for that was, if you're selling option premium at these levels in Apple, you're a jerk. And then, of course,
I was right.
Your counterpart came in less than a week later, like the next show, I think, Andrew, and talked about how he's selling all this premium in Apple. And I was like, didn't your other half just say you had to be a jerk? And he's like, well, it didn't work out too well, so maybe I am a jerk.
I bought a bunch of calls.
You bought them from Andrew, I think.
I wrote up buying calls on the street. I wrote up buying calls in about 6 different ways. I encouraged us to. We actually did do that in Option Pit.
So just for the record, are you think people are still jerks if they're out there selling premium, including Andrew?
The Vol's caught a little bit of a bid, but I don't. I think that now that it's broken this all-time high, there's potential for a serious leg higher if somebody decides to buy some, because we're in kind of uncharted territory. So you're a little bit less of a jerk. But I would not say we're in jerk squad territory, but the volatility still is pretty cheap, and the movement is higher than and it's got more movement than it does implied volatility. That's never a time that I like. When realized movement is above implied, I almost never want to be short premium, and I think Mark would agree with that. That's usually a pretty good sign. That's a sign that
I think even our friend Don Schlesinger would say don't sell in that environment rather than buy. But yeah, I'm looking here, 30-day implied about 16.5, 30-day realized about an 18.25. So already there, you're at a bit of a disparity, and it kind of goes out from there. So yeah, maybe some still jerkiness at selling at these levels.
Yes,
I'm sure the Rock Lobster will take a lot of umbrage.
Maybe we need to
He's probably writing to us as we speak,
saying, we need to call it the premium jerk scale.
The Rock Lobster. I take umbrage. I'm sure if he was on, he would take umbrage. And if he was on, we'd be getting right now into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, getting our chatter here in between segments. That's what you get when you're in the live stream here, listeners. You get all the gold of Mark and I chatting over beverages in between the segments here.
We have a good time hanging out.
You have to come. We have a little bit of space for some studio listeners. Maybe we'll bring some folks in one of these days.
Contest. Win
a day with the greasy meatball. I don't know. I don't know. That might scare some people off. Your wife might take umbrage on that as well. I don't know. All right, so let's kick things off here in good old Himax Technologies. This is the name that we haven't talked about in quite some time. Ticker symbol HIMX, HIMX. Closing today, $6.76, up a whopping 6%, or about 40 cents on the day. It's a name that does about 4,500 contracts a day. Today, doing about 24,000. 11-1 calls over puts. So that'll give you some inkling of where our attention was drawn. This with a name, like I said, does about 4,500 contracts a day. So doing some fair paper today. I started off, looks like, with some activity on some upside calls. In particular, not Feb, not June, not March, not even April, but June. It was the June 7, so slightly out of the money calls here, lighting it up. As the day started, it's like about 1,000 went up here. As the day went on, a total that went up on ISE Gemini. You don't hear that name out here very often. As the day went on, quite a few more calls piling in. Total of nearly 4,000 on the 7s. Initial kind, by the way, initial 1,000 lock, that one block going up for 55 cents. Paper buy-in, again, as the day went on, about 4,000 total on that strike. Also, some decent size on the 9s, about 6,500 or close to it on the well. Paper buy-in those as well. Also looks like they bought a little bit nearer term paper as well, Mark. So it's a call palooza. 6,500 almost of the March 7s as well. Paper also buying those. So just a call frenzy. Call it what you will here.
Yeah.
Pun intended on HIMX. What you take here? You like Himax Technologies? A big one in your chat?
I like saying hi to a guy named Max, but that's about all I know about HIMX. Yeah, this looks like some somebody trying to take a shot at this thing moving higher. Fast that went up on Gemini means it probably was. That's not usually where like super ultra smart high end paper trades. That's somebody that had a undiscerning delta.
Well, they like the implied
opinion.
stuff gets some traction over there.
Yeah.
So that gets some interest in that.
But
yeah.
this is, but when you know that somebody's doing some serious size over there, that means they probably they're not overly sophisticated, but they may have a huge delta axe to grind. So that's my guess here. This is somebody that wanted the deltas and said to their guy, here's what I want to do and get it done. And, is happy and doesn't care about what they're paying in commish.
In the old commish. Your favorite show from back in the 90s.
That was I did like that show.
I can see
until they blew up Stan in the car.
You give me the vibe of a Michael Chiklis fan.
Well, then, as big Michael Chiklis, there's the number 2 guy was Stan, and then he got blown up in a car. It was shocking.
Is that a spoiler for the end of the commission? I've never actually
seen.
No,
it wasn't the end. Michael Chiklis lives, but
they blew him up in a car at the end of the show.
His sergeant, this guy Stan, in like season 4,
really?
There was that level in a car.
So the commission got dark. You're saying towards the later.
It got real dark.
Wow, a car bomb. I had no idea.
Goes, Stan.
Whatever. I had no idea. See the nuggets you get here, listeners? The dark twist that is the commish. This guy may be onto something, Mark, just because looking here at the year that was here in HIMX, not to say I love piling into all upside calls, but this thing is trading at fairly low levels, probably low for the year here. It was trading back not that long ago, back in September, almost $11, so nearly double where it is now, and got a little higher back actually earlier in the year, about $12 there. So there is potentially, if you're into looking at near-term charts as your advocate, perhaps some upside. This thing has been rallying hard just in the last couple of sessions, Mark. It was trading south of $5 just a couple of days ago. So maybe some might argue that move has already happened, or maybe our friend here is driving it up with his activity. Either way, probably a little bit of both going on out there. Either way, though, if you're inclined to think that HIMX is moving up, maybe this is interesting for you. Of course, then again, just loading up an upside call is never our favorite way to go. Always like spreads or something else to take off some of that premium risk off the table, but still better than the long 1, short 3 that we were talking about a little bit earlier. All right, moving on to a name we talk about a lot of the X's, XLE and a few XLF a lot. We talk about a lot about XLV here on the show. This is the Health Care SPDR. Again, closing about 73.5, pretty much unched on the day like the rest of the market here. This is the name, though. It's one of the X's, so it does decent paper, about 23,000 and change. Doing about 64,000 today. It's a bit of an interesting one, Mark. About 13-1 calls over puts out here. And our attention was drawn out to the March 76 strike, the calls in particular, listeners. We saw, starting off the day, a massive, one pretty sizable block of 38,868. To be precise, I think I would call that a sizable block. Would you, Mark? Would you? I know that's small for Carmen. That's small for Carmen line, but it's large for the rest of us.
Size, but that's not to me.
Doing those for 18 cents. It went up in one block over there on the Philly, where we all know they have no caps on their fees, or they had caps on their fees, I should say. So you like to see big prints going up there. Most likely, again, looks like perhaps closing, because as the day went on, a total of 44,000. So another about 6,000 and change going up here. And again, the open interest is similar, about 44,000. There was a print back in the middle of this month, just a few days ago here, of 40,500 for 19.5 cents. Obviously, that went up on splits. So this could be someone deciding, I'm not liking this one as much as I did just a few days ago. So coming in to scratch or doing it for about a penny or so loss. Or it could be someone doubling down for size. Again, the open interest, the volume today is almost identical to the open interest, so that always has me leaning close, but you never know. I've been doing this for a while, so my spidey sense is tingling. I usually go with it. But that said, our friend could be really loving this. So looking here at the year that was out here in XLV, this thing's been kind of all over the place in line with a lot of the big healthcare initiatives we've seen out there in the broad marketplace. Hit a high of about 75, actually hit 76 back in the beginning of August 1st. Kind of been vacillating around ever since then, but still hovering right around 73. Our friend here, if he's closing, he's giving up the ghost here, Mark, but if he's opening, he's really feeling the love here for XLV. Where do you fall on this? You think he's scratching? He decided a couple days later, my analysis might have been a little bit faulty, or you think he's doubling down?
I don't know. I think that, maybe he had a trade around. If it's a close, it's probably a repeal and replace type trade. Maybe we'll see a change in duration here in the next couple of days, and he moves the trade around. But if it's not, then he's doubling down. It's an interesting trade. XLV is one of the less interesting sectors for me in terms of being long. I really like the drug stocks right now, but not as much the actual kind of healthcare companies. I think there's some pieces in there. I wouldn't want to own a hospital stock right now, but I'd want to own
volatility in that sector.
A ton of
term.
biotechs look amazing right now. Those look like they are a steal, given what potentially could come out of this administration.
So Carmen Line long a ton of out-of-the-money calls in all biotechs across the board. Just buying premium left, right, and center.
If Carmen Line traded biotechs, then we would, but we don't.
You're no fun. You don't trade. What kind of fund doesn't trade biotechs? What kind of fund doesn't want that binary action? That popping of Tums before the announcement. That's the fun.
One that specifically describes itself as a VIX and SPX firm
with a dash of biotechs.
Of long biotech.
Read the prospectus. The third line in dash of biotechs. I put that in myself.
I forgot that
because otherwise it's just boring. VIX, come on, boring. Biotechs. That's where the fun.
I forgot we inserted that in.
Yes, you're like that other guy who had what was the name of his fund? The hedging with futures, and he's doing 1x3s.
We're Catalyst Fund. VIX SPX and balls long biotechs.
There we go. I like it. I would invest in that fund, sir.
The BLP.
Yes. There we go. Explicit tag for sure over here. Keep the kids away from the mic. I'm just giving you a hard time. All right, let's move on to our final. This is one of your favorites, Mark. Good old Mondelez.
The worst named company in the world.
It's not a good name at all. If you're wondering, listeners, that is indeed a snack company. They make snack foods and beverage products.
Formerly of Kraft.
Ticker symbol MDLZ. Closing today, $43.20, off nearly 5%. Not the best day here for good old Mondelez. This is the name that does about 23,000 contracts a day, doing a little bit more than that, Mark, to the tune of nearly 170,000 contracts, which is interesting. Almost one-to-one calls over puts. That should probably give you an inkling, listeners, that something was going up on both sides of the chain there, and you would indeed be correct. It was indeed all the way out in September. The activity that caught our eye, if I could just scroll all the way down in my platform wanting to scroll. There we go. Wants to scroll slowly today for some reason. It was, what caught our eye was a bit of a risk reversal. Looks like paper selling the SEP 35 puts and then coming up and doing the old bullish risk reversal, buying the SEP 50 calls. So nice and equidistant or close to it right around that at the money there of the 43 strike here. Doing that to start the day 3,000 times as the day went on, a total of 5,000 going up on both strikes. Open interest, pretty negligible on both, 100 and 600 or so. So all opening paper here. Again, looks like paper selling the put, buying the call, doing that for 55 cents. The call is, the call is over in this case. Yeah, a little bit higher. Went up in 2 blocks. Over there on our friend the Philly lighting it up today. So this is prepping, as it appears, for size upside move here in good old Mondelez, and also looks like really close to home. There's also looks like a size, could have been maybe a combo here. The March 47 going up, calls and puts both 27,000 times. Well, that's what it looks like here. This paper here, particularly on the that bullish risk reversal would lean towards that.
Remind me to piggyback this trade tomorrow.
There you go. Well, in your individual names and biotechs, and also Mondelez, VIX, VIX futures,
I've had a good year of
individual biotechs, and also Mondelez. That's all in your perspective.
I've had a really good year of piggybacking trades. I think of just kind of paying attention to usual activity, I've made like 3 or 4 trades where I bought like 30 contracts and made 15 or 20,000 a piece in the last year or so. Heinz was one. Hershey's was one. What's the Bayer deal? The seed company.
Oh, I know what you're talking about. I forget exactly where it closed out on the strikes perspective. But I know the one you're talking about. That was a
crazy one. So, if you pay attention, you can really tell when someone is playing for some sort of takeout deal, and you have to pay attention because there are differences. It can't be stock involved.
Looks like he might have done some combos here on the 47 strike, which is interesting as well.
Might have been stock.
So that might have been his stock surrogate.
This could just be a little stock replacement trade.
I believe he's doing 25,000 March 47 combos I can't tell what that is, but 25,000 of each. So that's 50,000 of the volume right there. So that could be there's something else, some other axe to grind here than just a risk reversal.
Yeah, it's probably looks like maybe like a stock replacement with like a little gamma kicker if things really go well, which is a nice little way to trade. People that really understand options, this guy probably does. There are ways to create trades that are very similar stock with a slightly lower risk profile that potentially have the ability to pay you and make more money on a serious rally. And I understand why anybody actually trades common. I really don't.
That's an argument we've made a lot here. People always write in saying, "What do you do with the underlying? How often do you underline?" We very rarely do for reasons like this. You know, how many times have I extolled the virtues of a simple bullish risk reversal on this network? Many times. It's almost always preferable to owning the underlying.
In the last 2 years, the only time I've owned underlying was when I wasn't paying attention and I accidentally missed
you got some options put to yours something. Yeah, that happens every once. Oh wait, I'm sitting on stock. How the hell did this happen? How the hell? I failed.
Now the good news is it's long SPY, and most of the time it was up.
I failed as a man when I have underlying in my account. Then you know you failed. But of course, Mondelez. It's been an interesting year. This one's kind of been all over the place here. And again, as Mark was saying, some M&A spec perhaps on their horizon as well. This thing was trading back as low as about 39 back in March. So it's been kind of a tight range. It's been kind of been in this 39 to 46 range, but back and forth pretty aggressively. So maybe a little bit of range bound action. But clearly here, this 25,000 lot of perhaps straddles or probably more likely combos. So a synthetic stock leg going up here, listeners. But that one notwithstanding, the bullish risk reversal clearly is bullish. And then we'll have to dig into this synthetic a little more, see exactly what's going up there. But it looks like our friend, either way, he wants to get himself long some deltas here in Mondelez, which would probably be a sign of some bullish love here for the near-term future. He's going all the way out to SEP, so he's buying himself some time, even though that March synthetic is going to go away a little bit faster than that. So interesting stuff here. Let us know what you think on some of these names. Meanwhile, we're going to keep on rolling. It's Thursday, but Uncle Mike still off there on assignment in Mexico, Mark. What the nerve of that guy, going on assignment and having fun and all this good time in Mexico, leaving us here to have fun in the studios by ourselves. But so no strategy block today, this week, I should say, listeners. But that gives us more time to talk to you guys. So without further ado, let's get on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to dictate what the heck we talk about, which is always fun and or scary in equal measure. While we're getting those ready, let's kick things off. Looking back at our question of the week. Last week we asked you guys what duration you like to trade. I thought for sure weeklies would win the day, but monthly and longer ended up being somewhere more than 2/3 of the responses. So clearly we got a little bit more longer term players out there than I suspected. That said, we thought we'd follow up this week with a little bit more related. What kind of strategies are you using in all these longer terms and other type trades? We asked you guys, said, hey, trading single calls and puts is fine, but smart options traders like spreads. What is your go-to spread? We gave you, again, only 4 choices. Kind of hard to boil the entire options universe down into 4 choices, but we tried. We gave you vertical/ratio vertical. We know where our friend is choosing today from his 1x3s. Calendars and diagonals.
Ratio vertical.
Yes, combo. So those are not the same thing, but we had to put them together. Calendar / diagonal, butterfly / iron butterfly, and we gave a whole category just to the iron condor because we know you guys like that one as well. So,
Iron condor stink.
Mr. Greasy Meatball, a conversation maybe we could have today. We'll see. But where are you falling on this? And I'll turn the screen so you don't cheat. Then I shall reveal what our voters.
Verticals is going to be the number one, for sure. My personal favorite is Andrew and I trade a lot of calendars and butterflies.
Those are separate though. You got to pick one or the other. You can't pick both.
Well, here's what I'll say with the VIX in the 11 and 12s. If you're not trading calendars, you don't know how to trade.
Surprisingly, it's hard to convey that level of nuance in 140 characters and 4 lines of choice. We say, by the way, with VIX at these levels and with this, so you're going to go for calendars, it sounds like. Okay. All right, so he's voting for calendars. You guys voted for verticals, but it's actually a pretty close battle. Verticals / ratio verticals doing 38% and 35% right hot on their heels mark for the butterfly. And my favorite, the ironfly. I think me talking up the ironfly has kind of skewed those numbers a little bit. And then only 19%, a paltry 19% going for your calendar / diagonals, Mark. So no love for you guys over there. More love for Mondelez than for you over there. And only 8%, this is surprising, 8%. Only 8%. Probably the strategy has gotten the most marketing push behind it over the last decade, the Iron Condor, and yet only 8% of the listeners choosing that mark, which actually is, to me is a little bit impressive. That shows our listeners go a little bit deeper. They're not as drawn in by the overall marketing push of this stuff. So we got about a day or so left on this if you haven't voted yet, listeners. At Options over there on the Twitter. And you too can make your voices heard. If you disagree, maybe you got a different version, you want to write in with your alternative, let us know. If you agree with Mr. Greasy Meatball, you're all calendars all the time, hit us up, let us know. And we shall discuss it. Meanwhile, let's move on to some of your other questions. All right, Mark, we got some earnings-related questions here. Our friend here, this is Gramercy. He wants to know, or perhaps she, hey, I'm interested in Activision ahead of earnings. I think he's giving us a hypothetical here. So if I buy one Feb 39 half call for $1.50, and then the stock opens up the next day and I sell it out for $5, what am I missing? Why does everyone say this earnings stuff is so hard? I'm not sure if he's asking us a question that he wants us to, is that what he should do? Well, in this case, that would work. Yes, Activision rallied pretty hard. As I mentioned before, they're one of the few names that actually outperformed from an earnings straddle capacity. They closed right around earnings, right around almost $40, 39 3/4. They were pricing in about a 7.5% move, about $3. They ended up opening up right around nearly 45, so they were up about 13%. So nearly 2x what they were pricing in. So if you came in and bought premium, or in this case, you bought direction like you did with this, what did he say, the 39.5 call, yeah, that worked out because that was pretty much at the money. And those calls, I believe, went out at, or they're still going right here, but they're trading right now for $6. So you're pretty happy if that was the trade you made. So I don't know, why does everyone say earnings are so hard? Well, picking that exact call is probably the challenge you're referring to there. And Mark, in general, you get a lot of people come into your chat room asking you guys about what they should do with earnings. You mentioned it before. I think you said at the top of the show, if you have no intention of having some direction to earnings, just don't trade it. Is that pretty much your stock answer for most people? Just avoid earnings because of all the exponential gamma, what we said before? Do you counsel this moment?
Unless you really see something out of whack and you get an opportunity to buy options excessively cheap like we saw with Apple, I don't bother. I never sell into earnings, rarely buy. Sometimes I'll do some calendars, but barely ever. Our friend Russell on VolViews kind of put it, there's no money in buying, there's no money in selling. Remember we talked about this a few months back. What did he say?
There was no net
edge
either way.
If you were a net seller of premium, you lost. If you're a net buyer of premium, you lost. And the amount you lost amounted to about the bid-ask spread. So anybody who's out there telling you all these smart earnings plays probably isn't that smart.
You know who wins in that scenario? The Tums manufacturers, because they're winning. Yes. Whichever way you're leaning, you're popping Tums the whole time. So those guys, when they get that exponential gamma, I like to see the correlation between that and the antacids, because I'm going to assume it's a pretty high one. So yeah, long answer to your question here, Gramercy. Yes, that would work, but good luck picking that exact name every time. If you can do that, then write into us more often with your picks, because you're a mystic, you're a Karnak here of the market here. But yes, that would work in that hypothetical scenario you gave us. All right, moving on to weird handles this week. Question here from from Niz. He or perhaps she. Pretty simple question here, Mark. They want to know, are there options on Snap? Well, Snap is not public yet. So the short answer to that is no. The long answer to that, I know they have I think they just announced a valuation. Do they even have a date yet, Mark? Is that date set?
Tomorrow.
Is it definitely set for tomorrow?
I think so. And I know they want $25 billion. They're not going to get it, but they want it. And that will be worth less than it is now. It'll be worth less than $15 billion this time next year.
There you go. Out on a limb. I'm looking here. They're saying here between 14. That's per share. 22 billion. 22.25 billion. That's a filing was released today. They don't say the exact date in here. Hopefully, if it is tomorrow, that would be nice. Because in which case, usually the time frame here, Mr. or Mrs. Niz, is about couple of weeks usually on the short end to get options. It could be longer if there's other things involved. There's a lot of things that have to happen. If they have the right amount of float, they have to be listed on an options exchange. Obviously, all those things have to go on. So there's a little bit of time that has to settle in. But hopefully, maybe in a couple of weeks from the time you hear this right now, you could literally be trading options on Snap. I think, quite frankly, the market could use another sexy IPO to get some attention.
Yeah, it's been a while.
We had Facebook, we had Alibaba, a few of the other names. They Facebook's done all right, but after the initial outrage over it, it seems to have done fairly well. Alibaba, perhaps not so much, but it's been a quiet year for IPOs and certainly for headline-making IPOs, so who knows? At the very least, Snap will get some people maybe piling back in, maybe get these much ballyhooed millennials to buy a share or two of some stock, let alone some options. So there you go, Niz. Hopefully maybe in a couple of weeks. By the time from this show, maybe you'll be able to sling some Snap, and we'll talk about it. We talked about it before, what happens in a lot of these things. The float gets tied up. It's hard to short. You see the puts get bid up in relation to the calls. You see a lot of these things start happening. That tends to unwind after this float gets sorted out and things. So trading options around an IPO can be a little tricky. So unless you're nuanced in it, maybe you want to stay away anyway. But still, it's interesting, and we'll be watching it as soon as it does go live. Well, this goes back to your favorite here, Mark, Apple. We've got Mark Tucker, Mark and Mark. 3 Marks here on the show here. So here we go. Just a preponderance of Marks to answer and discuss this question. We got Mark Tucker wants to know, do you think MaxPain was the reason to hold Apple below 132.40? I think this question came in a couple of days ago, so that's where it closed at that time. Well, I was just you're getting ahead of me. Let me get there. The rest of Nasdaq seemed bright green. Thoughts and thank you. That's what I was about to get to before
Mark,
before you so politely.
Congratulations on your question. You've been randomly selected to win for a free Options Insider tinfoil hat.
I was just about to get to that. We get questions on this every now and then.
That's right. If you believe in conspiracies and things like Max Payne, have we got a tinfoil hat to you? Mark Longo and his wife, Jacrati, will custom make you a beautiful hat of tinfoil that you can wear outside, and it will protect you from all of the evil government's x-rays.
Before we slam
Congrats to you, Mark, for your awesome prize of the free tinfoil hat.
We should make those. It'd be cheap and they would look nice.
It'd be amazing.
And we can send them all the zero heads, you guys. But that said, after we slam the poor guy, why don't you at least go ahead and explain what the heck he's referring, what this Max Payne theory really is.
They look at open interest and where is the underlying going to move to cause market makers the most pain, and there is. And I'm kidding. There is something around that, but you're not getting it on weekly expirations. You might get it on the major expirations. Like the main months. So options have their serial months and their quarterly months, and their quarterly months are like ones that'll list up to a year out, and those ones can build some huge open interest. So when you get to those months, and you're kind of near a strike that has a ton of open interest, the market maker scalping their gamma can create this concept that it gravitates toward a strike. But the idea that on a weekly basis or anything like that options are always going to be drawn, good luck.
us before, this does get a little tinfoil hatty, but there is this kind of feeds into this perception too that options are these weird, arcane, mystical forces that control the market, you know, this usually comes up around expiration. Now that expiration is every week and soon to be every day, we might have this question a lot more. But you're right, certainly on the weeklies, it's hard to see that. Some of the more serial type expirations, maybe you see some of that, but this is another variation, another flavor on that question we get a lot, which is, what happens around these large open interest strikes around expiration. And for the most part, we've kind of pretty much debunked this many times on the show. That can happen, but their options are by no means this all-powerful magnet that can just move stocks willy-nilly. People think it can make it jump, 20% around all these things, and that's just not in the cards. It'd be cool if options had that power. It'd be interesting to talk about. But I think every market maker would love to use that to their own ends, and it wouldn't end well for anyone involved. All right, moving on to what we got here. We got time for one more. This is Richard R. here. He wants to know, back in the 14-minute mark, he's precise, I like this guy, of episode 553, you stated that a $6 straddle was pricing an 8% move following the earnings. Is this just the current at the money straddle? We'll have to go back and check the exact show you're referring to. I thank you for the time code. I like that level of precision in our things. But yeah, 99, just without top of my head, 99.9% of the straddles I'm ever going to refer to on the show are going to be at the money. There's just no reason to, can you think, Mark, in the entirety of your options career, have you ever quoted like some reason all the money strike straddle? What would be the point on that? I can't think of any time.
All the money straddle?
Yeah, I don't
I've
really.
very rarely done that.
There's no real any. I mean, you have a massive strike there, and you have one useless strike.
You might see that in VIX every now and again.
But even then, who wants the 24 straddle? They want the call. They don't want the freaking straddle. So yeah, because the problem with that, listeners, is you get to an example in the VIX 24.
Quote to close is
Maybe
that's about it.
Maybe, but on this network, we never. There's no use case for it. I mean, what you're going to have is two very unbalanced legs. One has a ton of intrinsic value, one has zero. So you end up quoting one option with a couple cent on the other one. It doesn't make any sense. So we always talk at the money because it's the least confusing. It's the most widely used tool, and it's very straightforward. Everyone can understand it. Here's what they're pricing in for a percentage move in this straddle. So yes, that's exactly what we were referring to in that show. Whatever name, I don't know what name you're referring to, but yes, that's what we always talk about here. Straight up at the money straddles and what they're pricing in. Good questions, everybody. All right, we got to keep on rolling now into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what we're watching for the rest of this week into the weekend. It is a long weekend. The markets are closed here in the U.S. for President's Day holiday on Monday. I should mention, by the way, we won't have a show on Monday. We don't tend not to do shows when the markets are closed. So we look for a best of on that day. I'm sorry for all of you guys who like to tune in live. We won't be live that day. But that said, that always is something to watch these times, see how the decay is playing out in the marketplace. Are they taking it out too soon? Are they taking it out a little bit late? In which case, it's going to come roaring back the next week. All these kind of fun things. It's always that decay game you play around long weekends. So we're kind of playing that right now. Aside from that, not a heck of a lot else on the calendar. You got some jobless claims and other stuff coming up. You got earnings next week. So we'll talk about some more earnings next week, including Tesla and Baidu and a few others. A few big names still popping off. And of course, you got the Fed always in the ether. Will they, won't they? But that's kind of that's neither here nor there. They're always floating around out there. So anything in particular, Mr. Greasy Meatball, you're talking about the VIX settlement this week. So anything else maybe catching your eye or you're on your radar for the week to come here?
Nothing in particular. Obviously, we've got some amazing things coming out of our president's mouth, so we've got that funness. Although that doesn't seem to drive things. It sounds like we're going to start to get some clarity on healthcare sometime soon. So that's going to be something to watch. So watch your biotechs and your hospital stocks. But next week, I think we got a little bit of economic data, but not a lot. We've got a few retail earnings. I think we got JWN next week, and we got a few other names like that, but that's about it.
All right, everybody. That music means we've come to the end of another epic sojourn through the world of options. I like Mark talking biotechs. That's of course, for the Carmen Line portfolio. All the sling and size biotechs out there. CarmenLine.com. Check them out if you want a little bit of VIX and a whole lot of biotechs. Then Mark's the guy. Also a little bit of retail cosmetics that he also likes that. He has disparate knowledge in a handful of sectors, which is always alarming. And of course, We want to thank all of you guys for tuning in and joining us. And before we go, really quickly, Mr. Greasy Meatball, we're talking VIX settlement. Maybe it's time for another VIX settlement webinar, or what is cooking in the land of all things option pit webinars?
We're going to be doing a butterfly intensive here in the next couple of weeks. Look for that.
Will this be a master class again? Can I get my masters in butterflies?
No, just our Saturday classes that we do.
So I got associates in butterflies.
It's a nice 4-hour class. 3 to 4 hour class on really just butterflies and iron butterflies. So that'll be a fun one.
Oh, iron flies. Now you got me interested. You're talking flies, iron flies, now you got me
They're
interested.
all the same.
I may tune in.
6 and 1/2 dozen.
They are, but one's more fun.
So look for that. Webinar of the month will be sometime next week. So look for that too. All right?
That's like saying masterclass. Come to our masterclass. Check it out. Optionpit.com if you too want to be an option or a volatility master. I was going to make some jokes on that, but they're not appropriate with the master type, so we'll just keep rolling instead. And on behalf of the Greasy Meatball and indeed myself, and of course Uncle Mike, who's out there sunning himself in Mexico, couldn't be bothered to join us today. Too busy getting horrible Montezuma's revenge. We also wish him well. Check him out.
Don't drink the water.
RCM Wealth Advisors, or just hit up his book, Going Long, over there on Amazon. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.